Good morning, class. Good day, everyone. Um, my name is Ogunribo Kumbamidele Emmanuel. This is the module 3 for the Flex Blended model in line with my thesis intervention experiment under the Flex Blended model. So thank you once again, participants. I really have to appreciate you for what you have been doing. This is the third module that we'll be doing, and we'll be going right into the class. Remember, in the last class, we're able to complete the first two modules, which is accounting process, cash transaction, and I said in the last class that we'll be going to bank reconciliation statements. Now, as we move to bank reconciliation statements, we'll get to look at what are the transactions that we need to learn. When we talk about bank reconciliation, it has to do with something that from the word reconciliation. In the last class, first class, we talked about what we refer to as what we call source document. Source document. That means the document that is used by organization in order to give evidence to transaction. One of the source documents we underlined in the class while we're doing source document is our bank statement. Remember, we talked about bank statements. So this is one of those statements that is used. Bank statements is one of the statements that is used by organization. And looking at bank statements, we looked at what are those things that bank put in the statement. These are the statements. This is a statement that shows how cash move in and out of a business. And there we're able to see that in the banking sector, that we have three parties where we have the owner of the account, which is called the drawer. Then we have the bank, which is called the drawee. Then we now have wherever is going to the bank ordered to go and collect the money, which we refer to as the payee. All these are what we described in the last class. So remember, we talked about those parties where we have the drawer, the drawee, and the payee. The drawer is the owner of the account, while drawee is the bank, while payee is the beneficiary of the order. Now, bank reconciliation, we said, emanates from two things, and which we're going to look at. A bank reconciliation statement is a statement drawn up to verify, look at the word, verify the cash book balance of an organization with the bank statement. Don't forget what we said earlier from our bank statement. We said it's a statement that shows transaction of in and outflow of money. And in the last class, we did cash transaction in the last module. Now, what is to really be of instance is that whatever is the balance in the bank column of the customer, which is the drawer, should also be the same amount in the bank statement. All these we said we look at. Now, where the two value, like we're saying here, that it shows the lodgement, where the value in the cash book, that is the bank column of the drawer, is not the same with bank statements prepared by the drawee, then there's a need to reconcile these differences. So there's a need to reconcile the differences. And this is something that is usually done and is done in order to make sure at the end of each month, you are able to look at what organizations are doing. Now, reason for bank statement, he said that it affords the opportunity to update the cash book. It serves as a means of correcting errors and that which can happen, and fraud can be detected. When we talk about bank statement, you can also help us see if fraud, any unauthorized transactions, and it enables to highlight errors committed by the bank. So what are now the causes from the underlying factor that we have said? That this is talking about a situation whereby the balance in the cash should be equal to the balance in the cash book, bank column side of the cash book, and the bank statement. But what are those things that will make it not true? These are the highlighted causes of differences or discrepancies why bank statement and the cash book bank column will not agree. One, unpresented check. These are checks paid by the business but not yet passed to the bank or presented for payment. You might have a situation where things like that happen. How do we know that? You will see that they are recorded in the cash book, credit side of the cash book, but no entry made in the bank statement. So that is what you see. You see that where a cash book is prepared on the debit side, on the credit side of the cash book, and you will not see anything. It means that the customer has credited his cash book. Crediting cash book means there's been an outflow and the asset of the customer has reduced and the bank has not received it. So the balance will not be the same. Uncredited check. These are checks received by the business and debited to the cash book, but not being credited by the bank, meaning that maybe somebody has not got the person that the check was uh, when the check was issued to the customer, he has not been able to take it to the bank, or when they haven't taken it to the bank, they have not gone through the process of clearing. We also have what we call credit transfer or direct credit. This is money received by the bank directly from the payer on behalf of the bank customer, which is credited to the bank, but not reflected in the cash book yet because you don't know. Like, for example, some of us can also have a parent that they, they will make sure that at the end of the month, you don't have to start waiting for them. They can transfer your pocket money, or we'll call your pocket money, and you are using bank account. You just see that you see a lot. Standing order or direct debit. This is written instruction to the bank. Like a lot of us might have that too, whereby you would have uh, done this. Even this is not done by written alone. You can even sign on to this on your bank app, whereby you inform the bank that at the end of each period, at the end of the month, at the end of the week, that they should be deducting certain amount for your internet sub. Then you have bank charges. This is the amount due to the bank for rendering services on behalf of a customer with current account or any other account, not only current account. This is usually debited to the bank. And you have a lot of bank charges now. A lot of us even know it. You can mention them. We have our transfer charge. You also have the notable one now, which is called the standing order. All these are charges that can also be done. We also have the one of VAT. As you transfer, you see it. You have the one of SMS. Now, you also have what we call dishonor check. Dishonor check are checks that have been issued by the customer, the drawer, but will not be accepted due to the following. Maybe there's insufficient fund, the irregularity of signature, insufficient fund. We also have amounts in figure on the check whereby there's an error, no date, and there's alteration. There's one that I want us to all put at their mind. First to check. Still check is a check that have been issued, issued and not presented after 6 months. If a check has been issued and not presented after 6 months, that is called a stale check. Now, another one I want you to put at the back of your mind is where there is no insufficient fund in the account to the payer. Now, this is the term in Nigeria. It is called a DOR check. Remember, it's called a what? A DOR check. A DOR check is a check that indicates a fraudulent act whereby there is no sufficient fund in the bank account. In the account, and a check is issued. It's different from a stale check. A stale check is a check that you have issued to a beneficiary and he did not present it. So after 6 months, such check is said to be stale. Now, errors made by the bank or the enterprises are also there. You'll be seeing this when we get to an advanced stage of 8, whereby errors are made by the bank. You can have direct debit, you just debit your account, or direct credit, or there are some situations you have your own employee. You have a situation whereby the account is not properly maintained by the enterprises. Now, let's look at this. Procedures for bank reconciliation. What we need to do in bank reconciliation is matching transactions between each other. Like what I've seen there, you are going to see us put it in practice when we're solving. We'll compare what is on the debit side with the credit side of the cash book, debit side of the bank statement with the credit side of the cash book, what is on the credit side of the bank statement with the debit side of the cash book. And from there, we'll be bringing out all these facts. Like while we are checking through, the first thing we have to do is to get the bank, the cash book balance, where you're going to see us as I move ahead, and I'll show you. You also see that there are two things we need to do. The accounts, when we are doing bank reconciliation, we have what we call adjusted cash book, and then we now do the bank reconciliation statement itself. The adjustment cash book is to make us prepare, make sure that we adjust our cash book, and you can see all the information that can be there in. This goes into our adjusted cash book. And the basic thing you have to see that all the items in this adjusted cash book are not in the previous cash book. All the previous cash book. The previous cash book, maybe when you are prepared, you see you don't know the bank charges. Why all the other items are in the bank reconciliation. Now, let's see the format. Now, this is what we refer to as adjusted cash book. You can see we have the item here on the debit side, and we have the item here on the credit side. Now, if you look at the balance brought forward, if you're having your previous cash book, a debit balance, it will come to this place. But if you're having a credit balance, remember we did this in our first module, a debit balance is a balance brought forward that is on the debit side, while a credit balance is a balance brought forward that is on the credit side, a credit balance. Now, for cash book, and don't forget, the cash book we are looking at here is the bank column. And we talked about in the last module, double column. So overdraft is on the credit side. You can see it is on the credit side. Now, all those things that are in the bank statement, the debit side of the bank statement book are not in the previous cash book, will be accounted for on the credit side here. Why all those things on the credit side of the cash book, on the credit side of the bank statement that are not previously captured in the existing cash book will be what? Debited. You can see for all that. And at the end of the day, we can have any of these balances. If the balance carried down is on the debit, you see it's a normal balance. On the credit is an overdraft. And why? It's because if you have an overdraft, you will get to see that it will be credited. This is a situation where there's an overdraft. So let's be very careful. So our bank reconciliation statement now, you can now see the name of this, Enerayaton Enterprises. You can see balance as per adjusted cash book, added on presented check, then on credited check, then we deduct. If you look at this, like what I told you, I said that we might not consider errors made by the bank may be added or deducted and all the rest, depending on that. So let's quickly delve into this. Like what I've said earlier, you can see that bank reconciliation is a very simple and straightforward topic. What we're going to do now, all this ticking that I did in the first one, we're going to do that. Now, this is a question. Now, let's see the approach to this question. You have been required to prepare right off the adjusted cash book and bank statement. So to do this, the first thing I have to do, let's get the facts going. Let's get the fact going. The first thing, the name of the entity is Bemileke. So we are going to so let's do the account of Bemileke. Like what I always say, make sure you write the name of the entity first. Now, what are the two requirements? Adjusted cash book and bank reconciliation. There are times, which is very important, the bank's reconciliation statement is when? Dated June 20x4. So let's write the format out. Which currency are we using? Naira. So we have here balance as per adjusted cash book. Then we add unpresented check. Then we deduct on credited check. Let's get all this far done. So the first thing we said we're going to do, we are updating the cash book. So what is the balance carried out of the cash book? You have here 634. It means that the balance brought down is going to be on the debit side. I use the word there, balance brought for 634. Now let's get all the extracting. We said we tick 49 is here, is here. 76 is here, is there. Now 54 is debited here, it's credited here. 88 is debited here, is credited here. Now 116 debited into the cash book. 116 is you can see that is Akinwari is debited here, but it's not here. So it means if it's not there, this is the debited check. That's the first thing we have seen. O Akinwari 116, so we'll bring it here on credited check. O Akinwari 116. Don't forget we are deducting. So we've been able to get that. So we'll move to the next side. Let's see. I haven't done O. Remember, we have compared what's on the debit side. It was on the credit side of the cash book. Now let's go back of the bank statement. Here we have 47. We'll go to the credit side of the cash book to compare 47. Here 47. 106. 106 is not here. 42 is also not there. It means you have two items. And these are referred to as what we call unpresented check. Unpresented check. Now let's go. We'll quickly come here. What are the two? A. Ahmed. A. Ahmed, 106. We have F. Ajamobi. F. Ajamobi. Ajamobi is 42. Okay. Now, having completed this, the next thing we now need is to confirm what are those items that are not yet ticked. We start from debit side here, and clearly it gave us bank charges. So this is already in the bank statement. We use it to update our bank charges. So where do we go? If you can see, very easy, debited here, corresponding will come here. So bank charges, 40. Then we look at it, nothing there on the debit side again. Now let's go to the credit side of the bank statement. Is there everything that is there that we have paid? Let's look at that. So we have one item left. That you can also see called credit transfer. So what do I do? Credit transfer. From who? The name. Ekeregbe. Ekeregbe. And what is the amount? Ekeregbe. Now we cannot balance our account. Let's get the balances and then the values are properly done. Now from here we can have the addition. We look at, let's get that. And like what I always say, calculator is our friend in accounting. Don't get to do it by saying you do it offhand. So let's have 634 plus 52. That gives us 686. Now we can see glaringly that this is higher. We can now get my balance carried down minus 40. That gives me 646. So I have here brought down 646. So the balance here is on the debit side. So if my balance is on the debit side, for what we have said, we said this is a normal balance. Are we there? It means it's not an overdraft. So what do I have? This becomes 646. And what's the addition of this? That is 148. So let's now see if we are going to have our balance as our bank statement. So balance as a bank statement. Let's get that. So pick your calculator again. I'll wait for you. You know, I always tell you that accounting is the most beautiful thing. You are not in any wrong class. I hope you have gotten your answer. Try it again. So I will confirm. Remember, because we are doing it together. So for my own side, I got 678. If yours is also 678, clap for yourself. And under this point, you can also confirm that in this case, we have reconciled the bank statement. We have reconciled the bank statement. So bank reconciliation is completed, and we can see the beauty of this. Any question? Now, having been able to look at this, we can now see that there's nothing much to run away from. Are we there? There's nothing much to run away from. Now, we've been able to look at this, and what I've done is also to have shown you how we prepare the record. You can see all these steps, ticking and that I've shown here that is very, very simple. Now, what happens if you are given in a statement form? If you are given a statement form, let's quickly look at this in 5 minutes. Then we look at the end of section quiz. End of section quiz. So if you are there, I am there. Let's look at this class. Let's look at it together. Yeah. And what I always tell you, basic thing you need to know. The record, what the requirements, by reconciliation statement, and what period. So once we get that, our job is going. So let's start that. As I'm doing mine, I believe you are doing yours. By reconciliation statement for the month of October. So let's get to look at this. If you are there, now from here, you can see we are not going to tick anything. So this goes to make our job easier. So since we are not ticking, we just pick and drop. We're told that a trader shows a balance of, cash book shows a balance of 500 and 546 overdraft, while the bank statement shows a favor of 149. Oh, so what are the things? So here is the bank over, cash book is overdraft. So overdraft goes to the what? Credit side. So balance carry forward or brought forward, that is 546. Now let's get all the things that we need to do. And don't forget where we are going is that we must have the bank balance favor of 149. Now check issued amount to 659 has not been presented. This is very easy. When they say not presented, we just go there. Check. They didn't give us date, they didn't give us, they just give us the amount. 659. Thank you. Very simple. Check paid into on 31st October 20 amount to 185, not credited. Simple. I just go to check 185. Don't forget our format. Standing order, bank charges, all these are not in the cash book. So standing order is an expenses, bank charges and expenses. Go back to our accounting process. When expenses occurs, what happens to our assets? Our assets will reduce. It means that you are paying money, so your cash standing order. Let's take them one by one. Standing order, bank charges. Standing order and bank charges. Standing order and bank charges 10 and 29 respectively. That all? No. We have a credit transfer direct straight into the account of our client. We are the accountant. So we have G. Abubakar. And what's the amount? That is 260. Now, we also wrap up, get our balance. Like what I always tell you, don't forget your calculator. So let's move to our calculator. Smooth and steady. We have here 546 plus 10 plus 29. That gives us 585. So we have 585 minus 260. That gives us balance carried down to 325. So we are having a credit balance. Balance go down 325. Now, don't let us forget, we said earlier that once is an overdraft, it means it's going to be in the bracket 325 in the bracket. Now, why I'm also using this is to also dispel, remove the assertion of what a lot of people will tell you that once you have overdraft, you change the format. No. Once it's an overdraft means it's minus, the format remains the same, but it will be minus. So you now do minus 325 plus 659 minus 185. If your calculator is right as mine, and which I also know wonderfully is the same, because you are wonderful students, and we can see you are teachers that are going to teach other teachers. Teachers in training is also a future teacher. So what are the balance as per bank statement? So my balance as per bank statement will give me 149. Oh, and that is correct. You can see it's correct where we are. Now, having discussed all this, remember I said we cannot end any of this section without a quiz. So what we're going to look at, you've seen all what we have done under the band reconciliation statement. We started from what is band reconciliation, the parties to band reconciliations. Don't forget, we said the drawer, the drawee. The drawee is prepared, which is the bank. Remember, I said that customer is the one prepare the bank statement, which is the bank column of the cash book, while the bank statement is prepared by the bank. And then we also mention use of it for fraud, door check. Be very careful. There's a difference between a door check and a stale check. A door check is a check that is fraudulent inclined, whereby a check is issued by the drawer with evidence that there's no fund. It's not a mistake. While a stale check is a check that has not been presented after the 6 months of issuance. So let's quickly go to our quiz. An unpresented check for a period of 6 months and above is described as what? Like this is just what we described called a stale check. The three parties to a check are the payee, the dash, and dash. Okay, I believe you can also see this. You have seen something like this in your pretest. So you should be able to now see. It's not a payer, a cashier, a lower. One of the following documents is required as a source document for banking transaction. Being card, paying slip, debit, no receipt. Thank you. A lot of you will call this module accounting process source document. We said it's not a teller. A check paid by you, but not passed through bank system within 6 months. We also said that, remember, the grammar can change, but the name still remains still check. An instruction given to a banker to regularly pay some expenses is known as standing order. This is not a standard order, standing order. Now, which they say when withdrawing from a current account, you should always use a what? A check. That is that. You should always use a check. That is all we have to use. You should always use what? A check. Are we together? And the option is what? Our option is D. Are we together? Our option is D. Okay, let's move to the next one. Now, the portion of a check left in the checkbook after check has been overdrawn is called a check stub. Then a checkbook balance is, now we'll need to pick our calculator. A checkbook balance is 5,000. Let's look at that. A checkbook balance is, I'm looking for a page, but if I can't get a page, we can put it together. The checkbook balance is 5,000. So we have 5,000 overdraft. And we have unpresented 3,500 and bank charges 700. Don't forget, we'll take these bank charges first, which means that it's going to be debited. That gives us 5,750. 5,750 will now remove our 3,500. 5,750, 5,750 minus 3,005. The answer is 2,500 overdraft. That's at the back of my mind. Overdraft. A statement to agree the difference between cash book and the bank statement balance is called bank reconciliation. Why adjusted cash book is to update the document that is filled or completed to support cash lodgement in bank. We also remember that paying slip. Now, all these we have done. I want to also appreciate you. Thank you that we have come to the conclusion of the third module. So please, I want you to make sure you watch and revise on the three modules, the first three modules we did, which is accounting process. And I also want to remind you the second one, which is bank cash transaction, where we look at the single column, the double column. And now we have completed the third module. So we'll be going to the fourth module in which the video has also been shared. You can also see it on the YouTube link. So appreciate you. Thank you. See you later. Thank you very much, and God bless you.